This conference will now be recorded.
Let me open the file, what we have discussed yesterday in the Excel file. Okay, here, if it is a purchase order invoice, inventory receipt account data to vendor account credit. Inventory receipt account data to vendor account credit. Debit means what comes in, credit means what goes out. Give me a second. Okay. Yeah, someone is asking something. Okay. So inventory receipt account data to vendor account credit. Debit means what comes in, credit means what goes out. This is golden rules. Debit means what comes in, credit means what goes out. Another golden rule is like debit the receiver, credit the see, let me write down the all rules. Debit means what comes in, credit means what goes out. Three golden rules. Can anyone help me? Three golden rules.
Debit the receiver, credit the giver, sir.
Debit the receiver,
Credit the giver.
credit the giver. Another third one.
Debit all the expenses, credit all the incomes.
Debit all the expenses,
Credit all the incomes.
okay, this is golden rules. Okay, here in this, if you look at this one, this is giver. Okay, so non-commerce people, whether you are clear about this one or not, leave it. If you remember this one, this is enough for you. Okay, debit means what comes in, credit means what goes out. Okay, so debit means what comes in, credit means what goes out. So instead of invoice, if you are doing product receipt, means the material is receiving, but we are, instead of inventory, we are telling like product. That's it. So here, like material is receiving, that is debit, and accrual means this much of amount I need to pay. I need to make sure my amount should be ready. That is accrual. Okay, credit. So whatever it was there, it will be reversed at the time of invoicing. See, look at this one. This is debit. Now it is credit, and this is credit. This is debit. So that the net effect is these two will be nullified and coming back to this balance. So Mazel, as I told you, invoice received material and invoice is not happening in the same day, then this is most important. So in reality, 90% scenarios you may not receive invoice on the same day, or it may be received in your company, but you are not updating immediately. The users are updating later. Also, in these situations, we need to enter temporary postings. Okay, in the same manner, if it is a sales order invoice, customer account data to revenue account credit. So here, this credit and debit is, these two are this one. Debit the expenses, credit the income. Incomes are revenues. Both are same. Okay, here revenue is credited and expenses will be debited. This is purchase expenses or cost of goods. Okay, so this is clear for everyone. It's not an issue. The only this one it will be confusion because these items are, let me go back to chart of accounts classification. We have discussed 1 assets, 2 liabilities, 3 equities. Actually, in your education, there is no 3-step. It is a subset of liability. So these assets and liabilities are called balance sheet. These assets and liabilities are called balance sheet items. Okay, so in this balance sheet, always one is assets, another one is liability. In our dynamics AX, we have 3 equities, but in real time scenario, you will have assets and liabilities only. So asset balances will be always debit, and liabilities always it is credit. I mean to say, initially it will be posted with credit balance. Equities is also credit because company need to pay this money to investors back. In terms of company need to pay the amount to investors because investors invested money. As per the company need to pay money back to investor. That is the reason it is credit. Okay, next, for sales revenue, 5 cost of goods or purchase expenses, 6 expenses, 7 incomes, other incomes are incomes, 8 appropriation. So in this, these actually these are 2 only. These are expenses and income. This is income. This is also income. As per commerce, it is incomes and expenses only. But in our dynamics AX, we have bifurcated into further expenses and income indifferently. These 2 are expenses only. So you need to remember the behavior here. If you have more debits, your company is in a profit. If you have more debits, your company is in a profit. Here it is, behavior is completely different. You need to have more credits. This is called profit and loss accounts. Profit and loss accounts. This is balance sheet accounts. Okay, in this, revenue means income or revenue will be represented in credit. That is the reason credit all incomes. Credit all the incomes. Debit expenses. This is mix of all. Leave it that one. It is for calculation purpose we are mixing. So here balance sheet side, if you have more debit balances, then your company is in a profit. If you in profit and loss account side, you need to have more credit. So how to understand means x plus science background guys, I'm telling you, x plus something equal to y. So one side you can make balance sheet, another side you can make P&L. For mathematics people, I'm telling you. So this something is, if it is debit here, it will move, if it is moved to this side, it is credit. Am I right? This something will be minus. Agree with me? at any point of time, balance sheet plus P&L account all together value total sum of balance sheet plus P&L is equal to 0. This is mathematics plus commerce. This is commerce. This is mathematics. So I know like majority participants are commerce or either commerce or mathematics guys. So both should be understand clearly. If something is there here this side, it will be positive. Now this is the only area people will get confused a lot. This behavior is completely different. Debit all the expenses, credit all incomes or revenue. Here in the P&L side, we should not get more credits. It should be more debits values. Then your company is in a safe zone. In this, it is more credits. So now coming back to this one, here revenue account is credited. This is 4 series and this is 5 series debits. So more credit should be there. This is in P&L side. The net effect should be more in terms of credit. So the credit value, whatever it is there, it is profit to organization. So here credit means in this credit all incomes. That's what here. Okay. So temporary accounts, instead of these two accounts, if you want to use it, temporary accounts, you can use it, these two, and it will be reversed at the time of invoice. Understood? Just recap once again. So if it is confusing, you need to spend time and you need to think exactly what is happening. Okay, in classroom sessions, whenever I'm providing training to many people, classroom sessions, if people are dull, some people are dull, then I have given imposition also for many students. Write down 50 times, 100 times. But here in the online sessions, I cannot do anything for you. I'm a teacher. I strictly told you like I'm a teacher but not a lecturer. Whenever I'm teaching subject, teacher will give punishments also. So like that I will behave if it is a classroom sessions. But in the online sessions I cannot view your faces and you cannot see anything. But it is your responsibility. This is not a complex. You need to understand and you need to digest whatever the functionality I'm explaining. Okay, still any confusion on this? Any confusion? Anyone? So that I will try to explain you logically. Otherwise, if you are not able to apply logic, then you need to apply by heart. If it is clear, your life will be, I mean to say, in the entire future like finance, it will be easy if you are clear about these 4 transactions. This is A, this is B, this is C and D. A, B, C, D. If you want to learn commerce, A, B, C, D, you need to learn A, B, C, D. So one is vendor invoice, another one is vendor invoice partial. Here vendor invoice, vendor payment, customer invoice, customer payment. All these 4 transactions: vendor invoice, vendor payment, customer invoice, customer payment. I'm speaking the same words from day one. In this we have 2 parts. Invoicing. In like inside we have 2 parts. One is invoice and one is product receipt. One is invoice, one is packing slip. Okay, I hope it is clear. If it is any confusion, let me know so that I will try to explain you more details based on your mindset and based on your question. I will try to give you. Otherwise, I'm proceeding this remaining. Okay.
Satya,
Yes,
In
please.
sales order, there is a temporary accounts that we generated, right? Would you
Yes.
please explain to me the logic behind it?
Okay, fine. Why we are using this temporary accounts, am I right? That is your question.
Yes.
Okay. Suppose 2 crores of material is there. The material inventory value, it is 2 crores. Okay. Now, actually, if you observe any organization, so there will be targets given to sales representatives. You need to target like this. So what they will do, representatives, they will not much concentrate on initial 1 week, 10 days, 20 days, 15 days, 20 days. If it is closing to month end, they will focus a lot, and they will call different customers. So are you interested to purchase this item, that item? So if you look at this one, the date, now 30th, 29th and 30th, 29th, and every day the stores department is dispatching around 100 to 150 invoices. Now on 29th and 30, because of sales representatives need to reach targets, they will behind the customers to reach their targets. Then 29th and 30, 29th and 30, this example, current month, they have received an orders from different customers around 350 invoices. Means they need to deliver 350 dispatches. So regularly it is 100 and 150, but on these days they have received 350 orders. At that time, what they will do, they will try to focus on packing slip, but not invoice. Agree with me? They will try to dispatch the material at the earliest. Invoice, they will do invoice on 1st of July with backdated 30th. They can do it. But they will try to dispatch the material on 29th and 30 a lot. And they will do invoicing on 1st and 2nd. Now, there is a 2 crores of material in the system. Okay. Now, they have dispatched around 30 lakhs material. 30 lakhs material they have dispatched. So, like finance manager or CEO of the company or CFO of the company or general manager finance, some like key persons, they visited stores department, and then they observed it is showing around 1.775 crores. But whenever they're referring the document in finance, it is showing 2 crores. What happened to 225 lakhs, 30 lakhs worth of material? Then he need to give answer like delivery boy, like stores in charge. We have dispatched the material but not invoiced. If I'm doing temporary accounts, this 30 lakhs, immediately this 2 crores will be deduct and it will show you 1.7 crores, even though invoice is not happened. Roughly. Make sense? I think Sunita
Yes,
or some.
Yes, I'm following, Satya, sure.
Yeah. So to get impact at the time of packing slip, because invoice is not done. Invoice will be done by this stores department or finance department or some respective departments slowly, maybe in 1st and 2nd and 3rd, but they will dispatch material. That is the reason we need to use this temporary packing slip.
Oh. Now,
Yeah.
in accounting cycle, usually in real-time scenarios where I work, we do month-end closings. So with these 365, as it will be just an implementation part, will that be one of the processes too, or it's just up to the organization to do that process? And how
Yes.
will
Yeah.
Sorry, go ahead.
Yeah, proceed. Yeah.
Whatever the transactions that happen during the month end, by creating this temporary, just a location for us to, a temporary location for it to be there for some time and then switch it back, this will happen only during this crunch time where, or where we are taking more load than it could be taken and it is being taken care in the following month, right? Not in a regular month or not in a regular month.
So see, I will tell you one more example for this one. It is not only for month end, at any point of time. Suppose stores in charge, whoever is there, there are 2-3 members are there, 3 members are doing, and one person is on leave. Okay, then at any point of time, like stores department, they will try to dispatch the material to the customer at the earliest, so that they will not lose their business. Invoicing may be done at any point of time. Am I right? We can do it at any point of time. Usually the best practice is whenever it is dispatched on the same day, we need to do invoice. That is the best practice. There is a chance like maybe employee absent, if it is during pandemic situations, like some people are absent, some people are got affected, some COVID, and persons are not coming, then I will try to focus on packing slip rather than invoice. And at any point of time, if verify the on-hand inventory, I mean to say the financial value of the inventory, if it is posted packing slip at the time of packing slip, then it will impact, it will show you the real picture. Of course, at the time of packing slip, it will deduct only cost price of the item, but at the time of invoicing, it will include taxes, it will include charges, it will include all those things. But at the time of packing slip, only the price will, material cost, only material price will be updated. So whenever at any point of time, finance department, if they are looking at the inventory valuation, then it will show perfectly nearest value rather than wrong values, because this may happen in the middle of the business process also.
Okay.
Okay, and month-end processes, anyhow, I'm going to discuss with you in finance. We are going to learn month-end processes. What are the month-end processes? I'm going to discuss in coming sessions. We are going to learn.
Okay.
Yeah.
Thank you, Satya.
You're welcome.
Satya, I have a question now. So back to basics, where you said assets is a debit and liabilities is a credit. So I understand here that assets is something that bring amount to the company, so we call it debit, and liabilities is something we owe to someone else, so we call it credit. But speaking about revenues, revenue is something that brings amount to the company or that brings value to the company, right? So why do we basically call it a credit instead of debit? I mean, is it a hard and fast rule, or there is some kind of logical explanation behind this?
Okay, fine. So purely this is commerce related topic. Okay, so actually in the system, actually, like if it is a, there will be two types of ERP. One is personal accounting, another one is ERP. ERP is always double entry system. ERP is always double entry system, whereas personal account, you are entering only single line. So in double entry system, at any point of time, I want the total value should be 0. Trial balance should be 0. If you want trial balance should be 0, here if you enter debit, if you enter credit, then the sum of the amounts will be 0. Logically, system should need to verify at any point of time the total sum of, this is called trial balance, is equal to 0 at any point of time. Trial balance means sum of balance sheet plus P&L. So if you enter here plus, if you enter in this minus, then total will become 0. At any point of time, system will validate it should be 0. For that purpose only, the behavior was given like this.
And here may I ask, why should the trial balance be 0?
So this is commerce rules, to be frankly,
Yeah,
completely.
okay.
The debate related to commerce. So
Okay,
this
okay.
is defined in such a way that this is rules. To be frankly, this is a rule. I'm telling you like numbering 1, 2 is not a rule, but I'm telling you like assets and liabilities. Assets will be debits, means it is liabilities will be credit, and whereas coming to P&L, we are posting always double entry. Always we are posting double entry. For vendor, I need to pay money, and for this items will be expensed. Double entry system. Whenever you are posting any entry, here expense account data to vendor account credit. So we are posting one double entry, one debit, one credit, total is 0. So system technically it is verifying with 0. One is debit, one is credit. For customer invoice, asset account, customer account data to revenue account credit. Then it will be at any point of time, the sum of these two is 0. Make sense?
Okay, okay, right, Satya. Please go ahead.
Yeah. Fine. So this commerce, as I told you, this is purely commerce. So if it is any confusion, please let me know. I will try to give you clarifications to your mindset, so that based on your question, I will give answers to this one. If you are keeping silent without understanding, then it is your headache. Okay, I'm frankly speaking. So if you are any confusion, let me know. So take time at least this week and try to practice in front of mirror. In front of mirror, you need to practice yourself. So these 4 transactions, one is invoice and product receipt, and then these 2. And the customer invoice, customer payment postings also have explained earlier. You need to recap. Okay, fine. So today I'm going to go to another topic. I'm going to discuss taxation. So regarding taxation, I want to introduce. So first I'm going to show you in the system like standard taxation. After that we'll discuss later about different taxations. Okay. So in India, the taxes will be calculated based on item. In India, taxes will be calculated based on item. Means, suppose if I'm purchasing a car, the tax is suppose 28%. If I'm purchasing mobile, then it is 12%. If you are purchasing washing machines, suppose then it is 18%. Like item based taxation there in India. In India, it is item based taxation. Whereas in USA, United States of America, the taxes is based on the location. Means in which city, which state, which in which city, which state, the taxes will be different from city to city. Okay, the taxes will be different from city to city in USA. Means, suppose you are planning to purchase a car in New Jersey, the tax is different, and if you are purchasing same car in Texas, there is a different tax. So if you are purchasing in Alabama, then it is a different tax. So each state has different taxes. In United States of America, each state has different taxes. Means based on the customer and vendor, the taxes will be changed. Means the vendor, if it is customer is located in Texas, I need to charge different taxes. If it is like New Jersey, there will be different tax. So based on the customer location and vendor location, taxes will be different. Whereas in India, it is based on item. Now So to accommodate those things, we need to map sales tax group, item sales tax group. Sales tax group, item sales tax group, combination, whatever the intersection is there, those will be calculated as a taxes. Okay, suppose I'm just taking example like intersection in your 8th, 9th standard, 9th standard and 10th standard, there is unions and intersections. There is unions and intersections. I'm just recapping. So A equal to, this is very long back we learned. Suppose this is 2 table. Like this. This is mathematics, which we learned in 9th standard, 10th standard. This is 3 table, suppose. Now, this is A. For example, this is A and this is B. Now tell me here in this, which numbers will come?
12.
12. Yeah.
Which one?
12.
12. Okay.
Which is common in both the sets.
Only 12.
6 as well.
6 is, yeah, 6 is also there.
Yeah. So here it will come remaining 2, 4, 8, 10. And here it will come remaining. So 3, 9, 15 and 18. So the common, whatever it is there, those will be a taxes calculation. If suppose there is no intersection, there is no intersection, means common quantity is not there, then tax will not be calculated. Taxes, if you want to calculate taxes, the intersection between these two should be exist. The intersection should be exist. So let me remove this one. This is mathematics we learned in 9th, 10th standard. I'm a mathematics teacher. I love mathematics a lot. Okay, so just I have given example. I have provided training to mathematics to my friends, all my friends, and my friend students got state first. Almost 3-4 years. I don't know the latest, but earlier in 2005, 2006, my friend I usually teach mathematics to my friends, and my friend became a lecturer and he taught to so many students. His students got state first. So whenever he is speaking about that one I learned from you, then I'm very proud to that one. Okay, fine. That is, I'm a mathematics lover. Fine. Now here in the system also, we need to map sales tax groups and item sales tax groups. If it is in USA, then here we will map all taxes. Sorry. This is relevant taxes, means city tax, state tax, county tax. County means, you know already, so many people in USA it is in India we will call it as district. In there it is county. State tax, because this is will be mapped with customer or vendor. Customer or vendor will be mapped here, and this is all taxes. Then here I mapped all taxes. Here I mapped particularly for that city tax. Then anyhow, this city tax, state tax and county tax will be there. It will be captured. This is suppose New Jersey sales tax, New Jersey city tax, New Jersey wherever the county it is there, that tax, and then state whatever it is there, the taxes is available, that will be calculated. If customer is available in some other city, then those taxes will be available. So each customer or vendor will be mapped with these combinations, and this is mapped with item. This is mapped with item. This is mapped with item. This will be mapped with item. For item, we will map all taxes, and for customer and vendor will map respect to taxes. For customer, like suppose customer or vendor is located in New Jersey, then New Jersey taxes will be mapped to that customer or vendor. And in the same manner, if it is a customer is in Texas, I am using the state like state locations. You know, like many people, like city, district, and district means county, every will be there. So wherever the customer or vendor is located, that taxes will be mapped to that specific customer or vendor. Then it is calculated. Common means that is specific, it will be posted. Whereas in India, give me a second, please. I'm sorry, I'm back. So whereas in India, it is based on item. It is based on item. I'm not talking about only India, USA. The taxation will be two types of taxations. One is location based taxation, another one is item based taxation. In India, we have items. Item will be mapped with, if it is item is car, then it will be 28% tax. If it is mobile, I'm just example I'm taking, I don't know exact figures. Okay, suppose 18% or 18% tax. Suppose washing machine, 12% tax. Just I'm taking example like this. Item wise, we'll map the taxes. Now here I will map all taxes. Here it is mapped with customer or vendor. Then this is I'm taking example India. So this is purely I'm explaining about the VAT, service tax, excise. At that time the taxes. Of course, GST is a little bit different, the mapping, but the behavior is same. The behavior is same. Here it is location based tax, the location based tax, place based tax. In this item based tax. In the world, these are the two options. Either it is item based or location based. Understood? Any doubt in this? Any confusion? Okay.
Who does the mapping, Satya?
Yeah.
This whatever the mapping for the taxes, it should be done with the consultation with the tax person, like a CPA or some some person who is certified in that area, correct?
Yeah. But actually, the amounts you are collecting, actually, can I know, like, are you from USA?
Yes. Yes.
Yeah. Okay. So in India, being a finance consultant, I need to map. Whereas in USA, it may be different because the reporting purpose, you need to have different rules and regulations in USA. So there will be separate tools. I heard like some separate tools, 2-3 tools are there additional ISVs. Using that one, you are proceeding with the functionality, but the calculation should be mapped by finance consultant. I mean to say, the setups should be done by finance consultant, and after that, for reporting purpose, you may use different tools in USA. In each and every country, taxation will be different from one country to another country, but minimum basic setups should be done by finance consultant. Okay. Fine. Someone
So in
else is speaking.
USA, for becoming a financial consultant, you don't have to be a CPA, correct? Anybody with accounting background can venture into the field, right?
In USA, I have so many my students. They have completed their BTech in India, and they moved to USA and they did MS, and they became a finance consultants. There are many people, my students, they became a finance consultant without commerce knowledge.
Okay.
Yeah. So if you want to become an accountant, you need to have thorough knowledge of commerce. But if you want to become a finance consultant, if you are clear about this debits and credits, that is enough.
Okay.
Yeah.
Thank you, Satya.
Yeah, welcome. So someone else is speaking.
Yeah, Satya. It's just wanted to know how it works in UK. Is it different or is it like standard taxation?
To be frankly, I did not get chance to look at UK taxation, but I'm not sure about how it will be. But either one only, it will be either it may be like a location based or item based. But I'm not sure correctly exactly what is the UK taxation. Which one is? Maybe I'm expecting maybe item based, because India is majority we are following, because in olden days 200 years back they have ruled us. So that is the reason it is majorly we are adapting UK like functions. Like suppose take the example, we are going left side free turn, whereas in US it is right turn free. Okay, so I hope this may be item based. I hope, but I'm not sure.
Okay, I'll check. Thank you.
Yeah, welcome. So let us understand this process in the system, and I will discuss once again about this one. But let me show you in the system how it is calculated simply, and then we'll do the setups configurations tomorrow. But let me show quickly one transaction about purchase order invoice and sales order invoice, how it is calculating the taxes. Give me a second, because from last 30 minutes I'm not opening the system. We'll create a purchase order invoice, and we'll see how it is posting. So I'm creating a purchase order now. So I'm creating a new purchase order. Even vendor invoice also the same. I'm selecting item, I'm selecting vendor. Selecting site and warehouse. Okay, selecting item. Suppose take the example 1000 item I'm taking. So to quantity at the rate of 899. Okay, now here downside, setup tab, we have sales tax group and item sales tax group. Item sales tax group I'm selecting. This will be mapped with item master. This will be mapped with item master. So I'm selecting item. I'm selecting all sales tax codes, something. If I select all sales tax codes and if I select sales tax group, anything, now if I go to purchase tab, tax area page, sales tax button, then intersection between these two will be calculated as a tax. What it means, let me close. Let me take duplicate. So in this, if you go to all sales tax group, if I click all sales tax group, it will be available all taxes. In this, we have Georgia tax, Florida tax, Fargo tax, like this. There are so many state, city, county, all taxes are there. Whereas if I go to let me go to this purchase order. Just now we have created. This is item sales tax group. As I told you, in USA, it will be map all sales tax groups for the item. And for this, if you go to setup tab, sales tax group, give me a second. Sales tax group, it is 5% something, it was mapped. So it is mapped with only one tax. Suppose I will change it to one tax. Okay, if I change it to California tax, because this will be derived from vendor. If you map in the vendor, automatically it will be captured. So suppose vendor is located in California, then in California, whatever the taxes are there, let me verify. These are in California, it is these three taxes are there: AV caste, HR caste, and SP caste. California state tax, okay, whatever it may be. So in all, it will be available all taxes. It will be all available. AV caste, HP caste, everything it will be there inside, all taxes. Now if you verify the sales tax, then it will show three tax, whatever the intersection between these two. Suppose if I remove one tax group, either one, if I remove this one, then if I verify sales tax, it will not show anything. It will not show anything. If you select, suppose, sales tax group, California tax, and you have not mapped any all item sales tax group, suppose if you have not mapped, if you verify the tax, then also it will not show any tax. So it is must you need to select item sales tax group and sales tax groups both, whatever it is there, you need to map both, and the intersection between these two will be calculated as a tax amount. Okay, now I'm doing product receipt confirmation.
Satya, one question out here, like there could be taxes on both, you can say item sale tax as well as the sale tax group. Both are defined, but still I want to exempt that tax from that particular state.
Okay, that exemptions also available. Okay, so that is country to country it will be changed. Okay, in this we have exemptions calculations. If you go to this tax code, actually in this tax code, I'm sorry, this is actual sales tax code. In this, if you go to sales tax codes, values, how to define, I will show you tomorrow in detail. So in this, it is not showing the exemption. So in USA it is there, it is not there, the exemption calculation. But whereas in DEMF company, that means Europe based company, I'm just going to like, let me go to not this one, let me go use this one. I don't want this to here. Exemptions also available. That is country to country it will be vary. So in DEMF company I'm showing you. So if I go to tax codes, so module is in 2012 it is not a separate module, whereas in D365 they made it as separate module. So here indirect tax, sales tax codes, this is in DEMF company. So if you go to sales tax codes values, the exemption value percentage will be available here. Non-deductible means, I will show you another example which is having this one. In this, okay, so country to country the taxation will be different. To be frankly, the country to country it will be changed. There are different taxations. I'm telling you like the standard behavior only, but not each and every country has different taxes. I'm not expertise in all country specific localizations. There are in Dynamics AX we have around 36 country specific localizations. So for each one there is a white paper will be released by Microsoft. So if you Google by D365 localizations, you will find here you will find this one. These are the country specific localizations. Suppose you want to implement in Kenya taxation is not there. What I have to do, I need to take nearest taxation wherever it is there, and I need to do a customization.
Satya, Arvind here. One hypothetical query. So you had mentioned either it is a location-based taxation or it will be an item-based taxation across the entire country.
Yes.
Any situations where a mix of both will be there? Because in some countries we read that some regions are autonomous or something like that. Technically they are part of the country, but sometimes they are autonomous and have their own administration and something like that.
So actually that's what actually in our system whatever I have knowledge I'm sharing with you. So it is whatever I face, like it is India and USA I observed a lot. Of course, I worked in Dubai, and I worked in Dubai. I mean to say Gulf countries earlier before GST. There is no taxes. I worked in Malaysia, Singapore. There it is only like India, only taxation. I did not get that kind of hypothetical combination, but Microsoft is recently introducing one tax engine separately. Tax engine is developed by Microsoft. In that, there are so many combinations. There are many things. Because recently, Microsoft, it is not yet released in the market. I don't think so it was released, but it is it is going to be released in this month, or last month released, or this month is going to be released, or next month is going to be released. I don't know. I know there is a tax engine. Using that, instead of third party ISV, you can use Microsoft engine. Using that one, you can use it, but it is a separate charges. You need to purchase a separate. You need to pay some amount and you need to get that one. That is my very light information. What I know, I'm just sharing with you.
Okay.
Yeah. So because in Europe there are so many combinations, particularly in Europe, of course. So each country there are different taxations. So that is developed by Microsoft. I think it may be used for USA and Europe countries. They may be, but I'm not fully. I don't have fully knowledge on that one. But high level, I'm just telling you.
Yeah. Okay.
Now, quickly, I will do in another 5 minutes. I will do product receipt, and I will show you the tax will not be included at the time of product receipt, and at the time of invoice, tax will be included. Let us understand that one. So I'm updating 1876 something product receipt number I'm entering. Now, if I'm updating product receipt, we have enabled temporary ledger accounts yesterday. So now will verify how the amounts are showing, and at the time of invoice, how it is showing. Just bear with me for 5 minutes, not more than that.
Satya, this we saw when you clicked on the sales tax button, there were three codes which the system showed us. How will the system know which out of these codes to be picked? Because right now the same percentage is applicable, 7.5 for the California thing. But if there are three different percentages, how will the system identify or know which code to be picked up?
So the same logic as I told you, this one. Sales tax group, item sales tax group, the intersection between those two, how many is there? Those many will be picked automatically.
Oh, so there will be three taxes which will be applied, is it, in this case?
Yeah, for them. We'll discuss. Give me 2 minutes, I will discuss that point. Now look at this one. So product receipt is updated with 1798 amount, because 899 multiply with 2, it is 1798. If you are doing invoicing, now taxes also will be included, and this two ledger accounts, whatever it was posted, that will be reversed, and now you will find 6 lines. The invoicing one is inventory receipt account data to vendor account credit, purchase expenditure for product 0, and then this tax value also should be updated. Vendor will be credited and tax will be debited. So during invoicing, taxes will be debited. Give me a second, let me post this one and then we'll discuss. Now I'm posting. Now 1798 plus taxes also is there. That amount includes in the vendor account. Now if you go to this invoice, you will find 6 lines instead of 5 lines. Yesterday we saw only 5 lines. Now it is 6 lines. Look at this one. So it is 2189.07. So look at this one. Now 6 lines. One is cost of material invoiced account data to vendor account credit. Vendor account credit. Here cost of material received and purchase accrual account will be reversed. These two. And now sales tax account, it is posted. It is credit. And this is expense. It was mapped as expense. So we will discuss this one tomorrow. What it is, why it is expense or something. We'll discuss this one later tomorrow. So there is a behavioral tax. Tax behavioral will be different. That we'll discuss later. Okay, I will show you some setups and those things. Now it is 6 lines. Because it is updated to the vendor account. I need to pay 2189.07. Earlier, it will update the cost value, inventory value, this one only. So as I told you, it is at the time of product receipt, it is posting temporary accounts. Temporary accounts is only material cost. Whereas final invoice, it will update the total taxes plus item value plus taxes, plus if it is any charges, any transportation charges, maintenance charges, those things will be included. Okay, yeah. Now coming to your point, one person is asking. So here, if you map only one, if you map 10 taxes, here you map 90 taxes, but the intersection between these two, whatever the taxes are there, those taxes will be calculated.
So the example of the 2 and the 3 table, there were 2 numbers there, the 6 and the 12. So 2 taxes will be picked up, the 6 percentages and the 12 percentage. So basically 18% will be applied as the tax value.
Yes, exactly. You're right. Yes.
Oh, right.
Okay. Anything else, anyone? So a little bit inside, we will discuss about taxation tomorrow. I will discuss with you, because Indian taxation, how it was changed. Before 2003, something taxes are there, and up to 2015, 2016, there is Indian taxation where is different. And from 2016 onwards, GST came into the picture. One country, one tax. It was a slogan. Okay, it was there is a drastic change from taxes is simplified in GST. What is the behavioral, I will discuss about before 2016, what is the tax calculation after this one, and USA taxation, what is the difference, I will explain you tomorrow, and we'll discuss further more about taxations in the system. Of course, some minimum setups you need to do it. You need to do it. Being a finance consultant, you need to map minimum setups, whatever it is required, that is your responsibility. Of course, if it is Indian taxation, there are many setups you need to do it. That is high level. I will give you inputs later, not now. First, I'm showing you the standard taxation. Now I'm focusing on standard core taxation. After that, I will give you a brief about Indian taxation, GST, how it will be, not now, later. Okay, fine. I'm stopping here for today. We'll connect once again tomorrow morning, 7 a.m. IST. Please try to join sharp 7. If anyone want any doubts, please ask. Otherwise, we can wind up for the session today. Okay, nothing. Then bye.
Thank you.